Well, good morning students, because this will of course be shown in the morning in Tutor Reflections. Delighted to be once again back in the Virgin Money offices in Gosforth with, I'm sure no stranger to many of you, Mr. Karl Morgan, who is the Structural Liquidity Manager here at Virgin Money. I'm sure I've got that right, Karl, in terms of your title. So, ladies and gents, you will all be aware that the citizenship programme requires you to have some knowledge of money and the financial markets, and I thought what better than to go and ask Karl if he could give us a little bit of a lead on that and a little bit of a steer. So in the course of the next few weeks we're going to be showing you a series of videos all about the money market and the finance markets, and Karl is going to help me to explain those to you. So first of all, thank you very much for agreeing to do this, Karl.
Yeah, no problem.
A great supporter of the college as ever. So today, Karl, we're going to start with the basic functions of money.
Got a card from there.
Okay, and the key thing then, Karl, from all of those: medium of exchange, unit of account, store of value, means of deferred payment. The key thing is that we obviously use money, cash, notes and coin, but of course it's moving more and more towards the electronic, and we're moving more and more towards cashless, really.
Yeah, we are, and we're seeing that more with iPhones, which all of you are probably a million times more savvy than I am with mine at the minute. So mine's actually a bit cracked up, to be honest. And it doesn't really work, but I'm sure you've all got the latest iPhones that do everything. But Apple have introduced a payment system. There's a new payments directive coming into banking over the next couple of years. There's open banking that's coming in as well, which is, again, new regulation, which is there to allow customers to move their funds around more freely. So when you're all out there in the working world, you'll be beneficiaries of that. And a lot of banks now are moving into what are called digital current accounts, which at one time you would take out a current account for a bank and it would allow you to manage your payments, but you would probably have to knock an Excel spreadsheet to know what you were doing with your money, where you were moving it about to. But everyone now is moving into apps where you might have money pools where you can assign various parts of your salary to that will allow you to pay bills. It will allow you to save for a rainy day and eventually move that money into a higher interest fund once you feel like you've got enough there to do that. Or you can have money that's just sitting there for your everyday expenses. One of the most recent good examples I've seen of that some of you might even be using now is the Money Box. Have you seen the Money Box app?
I haven't.
Yeah, it's pretty special. So if you say you go and buy a cup of coffee from Starbucks, if you pay on your phone, the Money Box app might charge you £2.60 for it, and it'll take the remaining 40 pence that you would have probably just put in the charity box or whatever if you were actually in that Starbucks. And it gradually accumulates money into an account for you. And you're given 3 investment options with Money Box. You can either go low risk, medium risk or high risk. And they've got an interesting graph on their website. I think it's moneybox.co.uk you probably find it on Google. And essentially if you'd invested £1,000 10 years ago with them, it would be worth £12,000 now. So they've had a very good rate of return on their initial funds that they've got set up. And I think it'll only grow over time, and I think it'll influence banks like Virgin Money in the long term as to how we give customers what they need with our own internal propositions. So it's definitely going to be the future, and for all of you watching this, I'm sure it's things that you'll become a lot more savvy with than say what your parents are at the moment and how they've been used to banking in the past, which they might have done online or they might have gone to the local branch, whereas now you might see more younger people who, when they go in university, they might want to stick some money away to go travelling, using the digital account proposition to achieve those sort of things. Whereas at one point people just tended to either keep a hold of cash, deposit in the bank and forget about it, whereas now people are finding that they've got more accessibility to their money and they're able to move it around more.